Hey traders, John Hal here. In this video, I want to teach you guys one simple but powerful chart reading technique or trading technique you can apply to your own trading to make sure that you're putting your odds on your side of having a successful trade. Don't place a trade based on this video here, guys, because this is just a technique that me educating you to help you become a much better trader. First link in the description, guys, is some free education, free course, and if you want some coaching from me, links in the description as well too. Yeah, so let's actually get straight into this, guys. The reason why I'm talking about this, guys, because there is one simple but powerful trading technique or chart reading technique that puts awesome trading technique puts the probabilities on your side. And what is that? Now I'm looking, as I'm doing this recording right now, I'm looking at the Dow Jones, and I'm looking at, and I'll be looking at the S&P and stuff like that. But let's just look at the Dow Jones. Now, the first thing we need to identify with the Dow Jones is we can see here, right? I'm looking at the daily chart. And sometimes we can bring this to, say, a 3-month view, and we can see what's happening through here. Bit of sideways movement, bit of upward movement, bit of a downward movement, and so on and so forth, right? That's really what's going on through there. Now, what is actually happening? So we can see that through there, right? Maybe we can even bring up the 6-month view, and we can see that through there. So, and we can see what there. So what we're looking for is, now obviously we need our trading plan, right? We need a trading plan, then when to get in, when to get out. But to put the odds on your side, awesome trading technique puts the probability on your side. What is that? It's trading with the underlying direction of the higher time frame trend. And what I mean by that is that right now we're looking at the Dow Jones and the S&P. Or if you squeeze this chart up, what do we see here? We see from this point through here, like even though we actually had, like, this is actually when the whole election was actually happening. Right here. So let's actually just look at this here. So many people at this point right now, so many people at this point here, start of November, were bearish in the markets, right? Bearish. This is when the market's going to crash, going to crash. And isn't it funny? The opposite happens to what the opposite happens to what the majority of the public says. So right through here, instead of listening to some people out there, what should we do? We should look at the higher time frame and say, okay, are we trading against the overall higher time frame? If you look at a short this market here, it's a low probability trade. Let me go and let me show you the weekly chart here. So if we're looking at this, now this is November here. Let's look at the weekly chart, the higher time frame. I trade the daily chart. Let's look at the weekly chart. Let's actually see what the weekly chart was saying way back here when the actual Donald Trump election was actually happening. What was the chart saying to us? Again, keep it really simple. What was that? That is this. We had a low, we had a higher high, we had a what? We had a higher low. And if you have a look at that overall, what do we have here? We have a higher high. So this higher high here, we had a higher low, we had a higher high. And right now, as this election was happening right now, through here, through there, right now, what's it? And obviously after the election, we actually had this up bar there. And even if we did get this up bar through here, who is in control of this market long term, like overall, right? Remember, this is an awesome trading technique. Awesome trading technique puts the probability on your side. What is that? It's trading the higher time frame, looking at the higher time frame. So if you're looking at trading signals, and remember I said before, right? Daily chart, people are looking to go short here when the election was happening. But if you just bring it back to simple basics, what is that? Higher low, higher high, and what is this now? So this actually could be still what? This still could be a higher low. So you wouldn't want to be short in this market. In fact, you'd be looking for long signals. Why? Because the overall market is going up. The overall market is showing higher peaks, higher troughs. It is that simple. So again, guys, if you're trading the daily chart, as you can see up here, then you want to go to your weekly chart, and you want to make sure that when you are trading with the underlying direction of the higher time frame. Now, as you can see through here, right? So if I go back to my daily chart, so many people have been trying to call the top of the market and blah, 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 all that sort of stuff. Let's actually just bring this back here, right? Now, what I'm going to do is I'm going to squeeze my chart up to the actual November election through there, right? So as you know, so many people have been saying, this, as you can see here, right? If you try to short the market here, or if you try to short the market here or there, you can see, right, that it's very short-lived if you're trying to short the market here. Now, what would be one thing to keep you out of going short through here? Again, let's go to the higher time frame. Now, let's go to the higher time frame. What is the higher time frame telling us? The higher time frame is telling us what? We actually have what? We have We had a higher high, higher low, higher high, higher low. Donald Trump election wins, rallies up. Oh my goodness, it's the Trump rally. Really? Well, we can just bring it down to the higher low, right? Buyers in control. What do we have through here? A higher low, a higher low. And what's happening right now? We're rallying back up. So overall, who's still long-term in control of this market right now? Buyers, right? Buyers. So throughout this whole time, the awesome trading technique puts probability on your side. That's why, as you can see here, right? Every time people try to go short this market, again, we're looking at the weekly chart right now. Bring the daily chart. If you're going to try to trade the market, you know the whole saying, right? Trade with the trend. Now, how do you identify the trend? The trend is exactly what I just said, right? If you're looking for short signals here or short signals here, or even short signals right now as we speak, what are we doing? If you're trading short, you're actually going against the market. It doesn't mean that I don't think the market may roll over, because it could roll over, right? All tops form at once, right? We just don't know when. But when we're trading, like this big down bar through here, right? Big red down bar, look at it, followed by movement. Down bar followed by movement. So every time you try to short the market and you're going against the underlying direction of this big trend, i.e. higher low, higher low, higher low, higher low, and so on and so forth, right? Higher low. Every time you try to short the market, and this applies to any market out there, guys, with the futures market, stock market, whatever market. Anytime you try to go against that trend, you have a very, very, very low probability chance of working out. I promise you guys. It's happened to me so many times, and it's such an eye-opener when you're trading with that trend. Now, guys, it doesn't mean that you just buy it because the market's going up. No, you still need an entry signal. Once you get your entry signal on your entry chart, look for the high time frame. So, for me, I like to trade the daily chart. So I'm always looking at the weekly chart to see what's actually happening through. Make sure I'm trading with that. Because if I get a really nice bearish signal and I'm seeing these major high lows, guess what? Bump a hole. Everyone as you know, right? Everyone through the election said the market's going to crash if Donald Trump wins. That's what everyone was saying. But if you bring it back to what the charts are saying, it's like, hang on, high, low, high, low. Huh. If you're trading, say, a 1-minute chart, look at the 5-minute chart or even the 15-minute chart. If you trade in the 15-minute chart, if you trade in the 5-minute chart, look for the 15-minute chart or up to, say, a 60-minute chart for the trend. If you're trading, say, a 15-minute chart, look for the 60 chart. Let's look for the 60 for the trend. And if you're trading the 60-minute chart, look for the daily chart for the trend, and so on and so forth, right? So no matter what time frame you're trading, you can go to that next time and just make sure you're trading with that trend. I promise you guys, it'll make a major, 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 major difference, guys. Every time I break this rule, I always get a big stop out. It happens more times than not. But every time I trade the market and I have a nice good breakout bar and I have a nice little entry signal and I'm trading with the trend, guess what, guys? That's how you can get a 90% win-loss ratio and have a really, really nice profitable trading career. Don't fight the trend. Trade with the trend and you will have a success.